All right. Good morning and happy hump day. My name is Jacob Gabbard. This is Invest with Jacob. We're doing our live stream that we do every Wednesday where we demonstrate our indicator, talk trading, and go through some training concepts, especially on trend days when things just aren't really super tradable. We'll see how we get today. Over January and even yesterday and Monday, the start of February, we've had trend days, just trend, because what we're getting is a lot of whipsaw right now and a lot of back and forth action that makes it really difficult to swing trade and also difficult to day trade. So swing trades, we're trying to do quick in and out swing trades, maybe one day, but most of the time we're trying to get in and out on the same day. But the reason we're taking them as a swing trade instead of a day trade is the style of trade it is requires a wider stop, so you need to use a different type of expiration on your option so you don't get beat up too bad. So we finished January in the green. It was not a great month. We were positive $1,600, which to be up money is good, but 1,600 is not what we're looking for on the type of volume we're trading. We're looking more for 10K plus. So by our standards, not very good. But that's what happens when you get this kind of whipsaw. And I think half of the trading days in January were trend days, even more maybe. And that's just really uncommon. Most of the time you trade within a range. You go up to a set support or up to a set resistance or down to a set support. And you trade off of those levels. And currently those haven't been holding in either direction. So it's been challenging to trade or just to get trades, not even to trade, but to get them. And then when we are getting trades, the volatility is causing a fair amount of stop outs due to the wide swings on the 5-minute bars that we don't typically see. So overall, being in the green during that kind of month, where if you look at the 3-hour chart or the daily chart, where every bar is up 70, down 70, up 70, down 70, to be in the green on that is, I think, navigating it pretty well. And that's an understanding of trading you should have, is that when things are difficult, if you're still navigating it in the green or close to break even, that means when things are good, you're having months like we had in, say November and October, where we had 24,000 and 26,000. We made 50,000 in 2 months. So the market does things that are not normal. And if you think of it, so think of it like I talk about this all the time, but here's an example of how that works. If you think of it like you want to be the casino, right? You want to be the person with the edge. You want to be the one making the money. The gamblers aren't building billion-dollar houses. The casinos are building billion-dollar casinos, right? They're the ones winning. So you want to be the casino. Now, do the casinos win every bet? They do not. They win more bets than they lose. They have an edge in every game, and that edge plays out over time. And that's all trading is it's just an edge. And if you follow a good trading plan, doesn't have to be mine, can be anybody's that's successful. If you follow a good trading plan that has a good, clean edge, then the law of large numbers plays out. However, if you are a gambler at all, and if you're in the slot market, slot market's kind of gambling, I guess. If you're in the stock market, you probably go to casinos sometimes as well. Not everybody does, but the thing about casinos is you can play one slot machine. You could put, let's just use a number that's out for me would be outrageous. You could put $10,000 into a slot machine, and you could spin that thing all through that 10,000 and never really hit anything good. And the casino just wins 10,000 straight dollars while only having to give you 100 here and 100 there on your bets, right? You could sit down at the slot machine literally right next to it, put in $10,000, and while that guy just lost 10,000, you hit a bonus on every fifth spin somehow, and you're up $25,000. That happens. That's called volatility, and it happens. It's part of how numbers work. If you flip a coin, you're not going to get one head, then one tail, then one head, then one tail. You might get 5 heads in a row. You might get 5 tails in a row. You might be on the wrong side of that flip 5 times in a row. Even though you stayed on tails the entire time, you might never get a tail. The other guy might have been on heads the whole time. He's getting paid every single time. So you have to understand that there is variance in how things play out. There is moments where the market isn't giving you the exact numbers you would expect. And that's part of almost anything you do, whether it's investing, whether it's your job, whether it's raising your kids. You come home one day and your son or daughter, who's normally really calm and even and normal, all of a sudden just goes through a phase because they're growing, their hormones change, they have a boy or girl at school that broke their heart, whatever's going on, and they're the devil. And you don't know what the hell's going on. You feel like you're a terrible parent. You feel like you don't know what to do, and your kid's hurting for a week or so, maybe two, maybe a month. It depends on the severity of the situation, but they're not being themselves. It happens in every part of the life of your life. Things don't always act the way they're supposed to. Your refrigerator runs every single day, then you wake up one day and it's broke. What happened? It was just sitting there running. Why is it now not running? Well, because things happen. So you run into these phases of the market where it's not behaving in the way that your system thrives. So your system may be built on volatility. Mine is built on reversals and identifying those reversals and doing really well. If it's not operating in a normal capacity, which it has not been for over a month now, it's going to be a lot harder for that system to operate normally. So when you get that kind of stuff, it's like when your Wi-Fi fails, you got to reset your Wi-Fi for some reason. Why? It's just a data crunch. Why is this data now causing it to fail? I don't know, but you got to reset it, and then eventually it gets back to working again. So everything in life has phases where it's not acting or operating properly. And that's what the market, for our particular trading style, that's what the market is doing right now. And we were still green in January. We still made money. Not as much as we're accustomed to, not as much as we want to beat the market and have the edge, but we made money. And that's a really good thing because it tells you that your system is pretty resilient in the face of adversity. And so we navigate it, we wait, we be patient, we take the trades we're supposed to take, and that's what we do. So it's been one of those months where the market hasn't been operating in the capacity we think it should, and that makes it very difficult to trade. And you just have to look at perspective, and you have to look at life in a big picture, holistic view and say, is this normal? No, it's not normal in the sense that the market is not operating the way it should. However, it is very normal for the market to go through phases of irregularity because everything does. You do, I do, cars do, name a thing. It goes through a moment where it's not working the way it's supposed to work. And it needs a reset. And that reset either, for a modem, it comes from unplugging it and plugging it back in. In the market, it comes from a major move that cleans out all the garbage. Right now we're in a big battle of bears and bulls. So eventually they will find that direction. They will break through a support and resistance, and we will start the next normal move in the market. So you have to have perspective when you trade. It's really important. You have to have patience when you trade. You have to understand that winning is part of trading and losing is part of trading. And you can never be too high when you win, and you can never be too low when you lose. I would venture to bet that almost all losing traders understand basic market tenets, support, resistance, basic entries, basic exits, things like that. What they don't understand is when those don't work, that their emotions hijack them and they make terrible decisions. So you must control yourself in the face of market adversity. And that is where, in poker, they call it tilt. That is where tilt comes in. And if you can't say, yeah, I had pocket aces and I lost to pocket kings because one of the two kings in the entire deck came out on my hand. If you can't control that emotion in that hand, you're just going to keep pumping money into the pot, chasing that money, and you're going to end up down 5,000 instead of down 1,000 or down 500 or whatever it is. So just a quick market lesson as we get started on controlling yourself and your emotions in the face of adversity, because that's when trading matters. When you're winning, trading's easy. When you're losing, trading's kind of easy. Not terribly easy, but it's easy to get out of the market and walk away and say, F this, I'm not trading. When you're in the overconfident mode of winning, um, then you get a losing trade and you say, oh, well, that wasn't supposed to lose. I know how to trade. And then you run it back and lose it again because you didn't listen to the market. So always remember that the market is going to go through periods of irregularity, just like every single thing in the world does. This is when people throw up their hands and say no one can predict the market. That's a fairly true statement. No one can predict the market. However, what you can predict is what the market will do most of the time in certain situations. And if you take that, you will have the edge, you will be the casino, and you will make money. That's it. All right, so what we do here on this live trade, if you're new to the stream, welcome. Thank you for coming. What we do is we trade the indicator. So I created an indicator. I partnered with a very, very, very successful day trader, and we put in parameters that we both know. We talked it through, and it's worked really, really well. We trade certain scenarios. It's got a whole bunch of inputs, it looks like 170 and change. And it calculates a probability, and it says we are probable to hit a level and bounce or reject here, buy or sell. And that level should, now this is the whole premise of the indicator, by the way, on the 5-minute chart, because we're day trading. This was built as a day trading indicator. It's also a swing trading indicator if you use the weekly. It works really well on that. We're looking for 5 to 7 ES points on the move. So we're only looking for 5 to 7 points. I'm sorry, that's not right. I'm thinking of a different, 7 to 10 ES points on the move. And then we have potential. Can we get 50? Can we get 70? Of course we can. We've done that a lot of times. But we're only looking for 7 to 10. That should give us our first win. We take off half of our trade, we trail our stops, and we never let the second half of the trade go bad, so we always close a winning trade in the green. So if we take profit on a trade, that trade always closes green no matter what. We also have tight stops. So we trade on the SPY, and wherever we get in at price, if price is, right now it's at 689.50, well, right now it's at 690.05, then our stop would be 689 on a call. Our stop would be 689.55, 50 cents lower on calls, 50 cents higher on puts. And what this does is it keeps us in the game. And that's the thing. When you are having bad days, weeks, months, and those will happen no matter who you are, when you're having bad days, weeks, and months, you have to stay in the game. You can't get wiped out. If you get wiped out, you can't trade tomorrow. You can't find the good day, right? You may find 4 bad days in a row, and then that 5th day is the good day. Well, if you get wiped out in the first 4 days, you don't get the good day. You don't get the day that would have wiped out those other 4 days. We had a whole month of losing one time. It was, well, a few times, more than once. But just as an example, it was about a $5,000 losing month. And the very first week of the next month, we were up $9,000. So we had to endure that month, take those losses. It sucked. But then the next month started, the very first week, we were up $9,000. It completely eliminated the whole last month and put us up $4,000 over that loss. So you just have to be able to survive and advance to the next day. And when you're having bad days, that's the time you must control yourself. So we implement stops. We don't trade on trend days. The reason is you don't want to chase the trend because they can reverse very strongly when they fail. And you don't want to try to bet against a trend. Trends tend to go the same direction the whole day. And if you get in late, it's not a good entry. And if you're trying to step in front of that freight train, it's not a good entry. So we don't trade trend days. Unless we're already on the bandwagon. We've been on trends before where it moves down, we buy, and it just goes up the rest of the day. We've had those types of trades before. But we don't jump in late on trend days, and we don't try to short up trends, and we don't try to long down trends. Because when they do that, support and resistance are no longer valid. And what we're trading off of is support and resistance. And the indicator doesn't have a function that says, hey, they're breaking through supports, we need to shut down the signals. It says, hey, this is another setup for a great short or a great long. Here you go. And it doesn't realize that the buying or selling pressure is much higher. And we're not holding resistance and support the way we used to. So we manually insert ourselves and say, we're not trading, and walk away from the computer. Other than that, it's pretty simple. There's a couple other rules. We only trade regular trading hours. The reason is volume matters. Volume at key support levels matters, and the indicator is built on calculating high volume areas. If you're in the regular or after hours trading, you don't have high volume, and it can cause a lot of false reads on the indicator. So we don't trade those. And we have a 3 strikes and you're out policy. So if we take 3 trades to start the day and they don't work out, we just move on to the next day. Consider that your max loss, and you're done for the day, and you get to start again tomorrow. Again, that's how we preserve our capital. That's how we stay alive. That's how we stay out of emotional trading. That's how we stay out of revenge trading. All of the things that blow up accounts. The number one thing is to keep your emotions calm and not blow up your account so that you can trade tomorrow. That's the number one thing in trading. All right, so let's see who's on here. I see a bunch of comments. So let me go back to the top here. It's called Not Being Me. Never. Oh, I think slot machines will never. Come on. Welcome to the stream, Will. Good to see you. Good morning. On a trend day like yesterday, do you ever change bias and start looking for puts to catch the downtrend momentum? No, I just kind of went through that and why. Morning, could you refresh Mentor Q's chart? The 1-day min. The Mentor Q chart is refreshed. We'll go over that in just a minute. Welcome to the stream, Joseph. Welcome to the stream, Fivefold Nutrition, even though you retracted your awesome message. I want to know what it said. Will, 1-day max looks like, yeah, we'll get through that in a minute. Welcome, WGS, or WG Shocker. Welcome, Autumn Love. I love you too, Autumn. So I've already seen guys talking about the 1-day min and max. You have 2 1-day min and maxes. You have the intraday, which is dynamic, meaning it moves up and down based on options levels. So right now the options levels are compressing, and you have the end of day. So the end of day comes in at the end of yesterday's session. It looks at tomorrow's options levels based on option activity, and it gives you the max and min for the day. Now, if I expand my screen here and move down, you'll see that the end of day is down here at 682. And the end of day up at top is up at 702. Rarely do you get what you see on the screen here, which is a secondary inside of the end of day. Most of the time, they're either at the same level or above or below. So the 1-day max would be above, the 1-day min would be below. But what this looks like to me, especially since I believe is Alphabet today, and then you have Amazon tomorrow, maybe. You have some earnings. And I have not looked at the calendar. We may not have any news coming up. Let me look real quick at the economic calendar. But anyway, the point is, when you have this, it's telling you that the options are compressing the zone. So now 696.28 to 689 may be our range today. So it may be a tighter day overall. I mean, that's still a 7-point SPY day. I would look for them to be buying the open. We are at put support. You have your intraday 1-day min moved into this zone. It's a pretty heavy zone for support, and they sold down into it. And you're seeing a couple buys try to appear, but they're getting stopped out right now because, again, these buys are low volume buys, so they're not accurate. So what that tells us is the range has compressed, and that through 696 will likely produce a squeeze up into this 699 zone. And if they can get through 689, they have a lot of room down to 682 here. So they're at a key zone. If they do fail, our major supports are going to be 69.30. If they lose 69.30 on the ES, they tested it in the overnights. We'll go look at it real quick here. We've got about 8 minutes before the open. So they tested it twice in the overnights. So right here at about 7:40, they made a low at 69.30, and then they came back down and tested it again at about 4:40. They've held it both times. They also tested it here right before the close, and then ripped it higher into the actual close. So that level is going to be huge. If they lose that, we probably fall about 15 points to 69.15 or so down into this consolidation down here. If you were in my room yesterday, late in the day after our call, I said that 6,900 and 6,920 would be excellent levels to buy if they got back above them. So we look for failed breakdowns for a swing trade type of look on trend day. So yesterday was a trend day, and somebody said, if you're patient, what are you looking for? I said 6,920. Well, they failed that. They never got back above it. Here it was not a failed breakdown, and then I said 6,900. So they ran through 6,900, which is what you want to see. So what you're looking for on a failed breakdown, real quick, we'll make this real quick, is you're looking for them to break that level. So they sweep it. This is liquidity right here. They trap a whole bunch of shorts, and then they instantly came back above it. That's your first warning if you are short here. They came back above a major low. They came back to 69.17, couldn't get to 20, and then they came back below 6,900 right here. So this tells you that this low wants to be bought, because what happens is off of this low, they go through the major low. So that's the first red flag for the bears. Then they come up. This could be a dead cat though, right? They come back up into this resistance zone. They can shoot it back down and make a new low. But if they can't make a new low, that tells you 69.20 does not have enough supply to push this down and make a new low. That tells you this low should stick and should be really strong. So they come back down below 6,900. So this is the trap, because 6,900 should be your support again. Well, they get below it to get more shorts involved. And as soon as they come back above it, 6,900 is your entry. Now, if you didn't want to take that entry, I understand, because I thought 69.20 was a better level. But they did the exact same thing. They come up above 69.20. They reject it, can't come down and make any kind of low. And as soon as they come back to 69.20, it's an entry, and you are off and running into the close for a quick 25-point ES win. So that was the price action yesterday. 69.15 now does become support, and then 6,900, and then 68.85 down there. But 69.30 is going to be our major support. We will look for them to kind of stab through that, maybe 69.25 or so, and then reclaim it. And then we'd look for them to go long there. If not, then 69.49 is our major level to get back through. So if they can make a low here and reclaim 69.49, that would be another one as well. Hallie, hi. Well, hello. Welcome. Do you need a subscription to TradingView to have access to pre-post price labels? You're going to have to be more specific on what you mean by pre-post price labels, but most TradingView stuff on a free account, I think you can have 3 indicators, maybe 2 or 3, something like that. So it depends. Sam, is Mentor Q for the pre-post price? So Mentor Q is just daily levels. And good morning, by the way, and welcome to the stream. So Mentor Q is daily levels. We're going to go back over to the SPY because we're getting ready to open. I got to get a trade set up. So let me do that real quick. And then we'll get ready to go here. But Mentor Q is those levels are put out at the end of the day, basically, overnight they're put out. And today is the 4th of February. We are looking for a call. So right now, 691. We got a buy already. Darn it. Stinks. This is the other thing that happened in January quite a bit. Right before the open, we're getting the signal. And once you get a signal, if it keeps going up, you're not going to get a new signal. The indicator doesn't say, oh, now it's really a buy. It just says you're in a buy. You're already there. I don't need to say buy again. So the entry was on this bar right now. So hopefully we get a rejection back to the one-day min here, get a failure on this buy, and then get a re-entry. Otherwise, they could rip this straight higher. We'll see. Sometimes they don't. We do have 9:45 final U.S. services PMI. We have 10 o'clock ISM services, and then tonight there's something. So we do have a couple little catalysts in the morning that could give us a rejection or a chance to get in. But right now, the buy signal has already fired in the pre-market, which is always annoying when you get that, especially if you're on a major level that you wanted to buy. Just is what it is. Sometimes you miss the move. To use the indicator key levels in TradingView. Yeah, so key levels is an awesome when it's a free indicator, and it gives you like the pre-market high and the like I use this month's average and this week's average and after hours high, month's open, yesterday's close. All those levels are important for trading off of. And you can find that it's Liquid Trader does that one. Oh yeah, you go down here to session, and so if you hit this little gear down here and you hit session, it'll say regular or extended. So you can get the extended trading hours there, and that should be you should be able to do that on a free account. From an overall market standpoint, it's been really ugly. January was an ugly month. I do still expect one more high towards 7,100, but there are a ton of cracks in the foundation. Another bank went under, um, another banking failure. You're seeing, and I've preached and preached and preached to you guys. Hopefully, you've listened that the banks are the key to this market and they will fail. They are going to fail. It is happening. It's already happening. They're just covering it up for as long as they can. They're just it's like when you are using one credit card to pay for another, you're eventually going to run out of ways to cover that up, and it's going to all come to where you default. You know, with the banks are under tremendous liquidity pressure right now. That's why the Illinois Bank went out of business Friday. Um, it's a bad deal in the banking industry, and they just won't acknowledge it or talk about it because they know the repo market's going crazy. If you don't know what that is, that's where banks have to borrow to stay liquid, and the more they borrow, the less liquidity becomes. And it's like a 1 day borrowing operation, so they borrow money for a day, and then they got to pay that back at the interest rates. That's what a lot of what the Fed rate's about. People think the Fed rates like mortgage rates and stuff. It ties all together eventually, or sort of. But in actuality, it's more the banking rates and what they get to borrow, how they get to borrow. Little rejection here at the open. There's the long stop. Now we got to see if it holds. That's the key. You can get the long stop, but it's got to hold. So I'd like to see them close down here at around the 1 day min, but otherwise, this can rip pretty decent here. The pre-market high is about $2 higher than we are now, a little over. So we'll see if they can hold or give us a rejection here. Again, they don't have to hold this 1 day min. This is just telling you that the intraday options, the new options that have come in through the night and into today, have moved the 1 day minimum for the intraday numbers up to here. At the end of the day, yesterday, the 1 day minimum was down here. So there's still tons of support down here at 683, but there's also a bunch of support here between 690 and 689.70. I do feel like they will come down and test these lows at 30. 30 on the ES, roughly 688.50 here on the SPY. And then what happens here will be important. If they break this, then free fall to 69.15 on the ES, and we'll see what happens. Roughly 686.30 or so on the SPY. So you can see they came back up to this 691 area. They poked through it and rejected. They came back. Well, you don't even. The 69.30 area is going to be right here. So the 688.51 zone going to be really important. They are below put support, which does give us a little bit of negative gamma right now. If they can stay below it, the negative gamma builds and pushes faster to the downside. So the longer they're below this green line here, the more negative gamma builds and the faster the market can move. But as they come into the 1 day min for support and the pre-market low and after hours low, pressure builds for buying. So market makers will cover all of this and push price down because everybody wants to short when they see a move like yesterday. So market makers will let them short. They'll let them push price down, and then they'll trap them like this. So everybody's trying to short right now. They're letting them, and then they moved price down basically a whole dollar on the SPY, and now they push price back up, trap them, and then they rip it higher. So we'll see how it shakes out right now. breaking the after hours low leads us probably into a trend day because they're going to free fall down to 69.15 in most cases on this ES. And I know we trade the SPY and I give you ES numbers, but that's just how I've done it for so long that it's more natural to me. So I try to give you the SPY numbers as well. Thoughts on Warsh as new Fed chief? He's not pro QE. I don't know. I think the Fed as a general entity is useless. I think it is made up and not needed. I hated Powell, but I think this guy will probably be equally as slimy. Everybody thinks Powell's got all this integrity and stuff, and I think he is a lying POS. But I you'll never convince me that when they came out okay, so let me give you my qualifications. Traded for 20 years, YouTuber, no college background, self-trained, not fully self-trained. I had a mentor and stuff. Turned into professional trader, but really studied economic theory and understand economics. But that's my background, which is pretty weak if you put it up against Powell's background, which is, I'm sure, like Harvard or some shit. And by the way, leader of the free world's Fed. And you can't convince me that he can come out during COVID and tell me that inflation is not coming, there is no inflation, and then say it's transitory, and then say, oh, nope, there's inflation and it's record inflation. Oh, and we can't stop it. Oh, and it's going to take us years to get it back down, when the minute we started printing money during COVID, I said, this is going to end so badly. It's going to cause so much inflation. This is going to be such a problem. We are going to be so underwater on things that we need to buy. I said it back when people were on my channel back then. I said it now. Either he is a absolute moron who has zero understanding of economic theory. There's that, which if we hired him, then that says a lot about us. Or, hear me out, maybe he's just lying to protect people. Maybe that's it. Okay, we got a buy here. 691 at 153. 691 at 153, and our stop is going to be 689.17. 691. This is a lot to get in. 53. Okay, we'll get that to the room. Okay, we're already there, guys. I haven't even taken profit yet, but we're going to take profit here. So I'm taking profit at 205. So we closed the half at 205 there, and climbing. We're going to move our stops to 180. That was as fast as they can do it. Luckily, I had my finger on the trigger. That was moving on us. So that's where, if you don't have the indicator, the delays hurt. Because there's a delay on the stream. There's a delay on me getting the order into my room because it moves so fast. So having the indicator, and right now I'm running a great deal on it. There's a link down in the description if you want to get it. Having the indicator is a huge benefit. So they took it right up here to first resistance. They're rejecting. We'll see what they do from here. Price is back down to 198. We have a stop at 180. We got in at 153. So really, really quick, nice trade there. And then we'll see as we go what happens. I'd like to see them go ahead and break out here. But again, this so they got above 69.49. Now they're back below it. I would like to see them get back above 69.49, maybe on the next candle, and hold our stop. So that's kind of a thread the needle kind of thing. They may pull back here, but if they get back to 69, yeah, it looks like they may stop us out at 180. Let's see. Yeah, there. Okay, we stopped out at 180. If they get back to 149, though, look for them to rip. Stopped at 180. So our average exit is, let's see, that is 25 cents. So 12.5, so 13 cents is 193 average exit. There you go, 40-cent winner to start the day. That works for me. Back above 69.49. I don't like it on the same bar. I want to see it on the next bar. So I'd like to see them close this bar below 69.49. If they get back above 69.49, that would be a reclaim, and we would look for higher then. James Sessions, are you using market orders? No, I do not ever use market orders. Too fast for me, says Will. It was fast. So, guys, what you do is here's how you do this. So, right now, price on the trade is at 203. We're obviously out of the trade. We stopped out. It is what it is. We made 40 cents really quickly. So, I have my trade pulled up. You're able to get all the way to the final zone of your trade. So, you pull up your trade, and then it says what's your limit. You do all that stuff and how many contracts do you want and what's your expiration, and then you hit submit, and it gives you like the final approval. My my ask, my bid or my ask, yeah, sorry, my ask, um, is always wide. So it's about going to be 5 to 7 cents above wherever the current ask is. So if the current ask is at 155, which it was at the time, I have mine at 165 or 162, something like that. And I just move it up so that when I get the buy, I'm not trading market, but I'm giving myself a wide enough window that I catch almost every trade in there. There are times that I can't. There are times that it just says, see you later, alligator, and you got no love. That happens. You just move on to the next one. But because I keep my ask so wide, I have a wide ask. Because I keep my ask so wide, I'm usually able to get in, and I've always got the trade with my mouse hovered on the button. So all I got to do is click. So it's a split second. I see the buy, I hit the button, and I'm in. Now, there are times that it's just faster than I can even do it. That time was probably close. I believe at the time the ask was at 155 and I had mine at 162. I got 159. Or sorry, the ask was at 149 and I had my ask at 159. I got 153. So there are times that it goes very quickly. And that's okay. There's nothing wrong with that. So what you'd like to see here, by the way, so 69.49, big key level on the ES. If we go look at that real quick while we wait, because we may get another buy signal, which would be awesome because then you have a reclaim. What you look for is, so 69.49 is right here. They came up above it. They came back down below it, and now they are back up above it. And this should run up to 69.63 as long as they hold this low down here. So they set a low, which was right off of the support down here. And that low is going to likely hold when you recapture a level. So they've recaptured 49 here. And they're going to trap here a little bit. They're going to run it back down and maybe run it back up one more time and back down. But they're going to hold this low. So what we do, this is why I said we use a swing trade and then try to get out on the same day sometimes. You can swing trade this so you have a little bit more theta, because you don't want your theta to burn up on these traps, because it will. You'll get eaten alive. So if you go like to tomorrow or even Friday, I would go to tomorrow and set your stop down here, looking for at least, this would be your first take here at 64, and then your next one would be 72, or you can take a little bit off there, and then you have a runner that you can let run all day if they happen to trend. That's called a failed breakdown, and they are reclaiming 49. So this has been a pretty good looking setup for that. So I would expect them to come up to 64 next. Now I don't take those trades on here on the live stream, and the reason I don't is I'm already doing day trades. And I'm already broadcasting to you guys. And I'm already talking about so many different things that it's really hard to manage all of that. It's just too much. So we just stick to the day trades. And on those fast ones, if you're watching on the stream, trying to get the entries off of the live stream, you're going to be at a severe disadvantage because very often they do that, and you're going to be 6 to 7 seconds behind my entry, and that can cost you 5 points. I mean, 5 ES points, and we're only looking for 7 to 10 to start, so you're already way behind the 8 ball there. So they do got to get through here. I did miss this spike up here at 691.29. They got to get through that. But assuming they do, we would look for them to run on up to 691.90. I'd be good with them coming back down here, losing this buy and giving us another buy signal. That'd be great because I do think we're headed higher. James, welcome to the stream. Jason, welcome to the stream. Appreciate you guys being here. So there's a lesson here to be learned that is important. If you've been doing something for 10 years, well, 20 years, but doing this specific thing for the last 5 to 7, and day trade, trading in general, but day trading for the last 2 years religiously every single day. That not every day. I'm on vacation sometimes, but basically every day, you become really fast and really good and really aware of what you're looking for and how to find it, or you should anyway. Otherwise, you're just copying and not learning, and that's a bad thing. But it allows you to be more ready, to understand more, to be more prepared for when trades are coming, so that you are entering as quickly as possible. My daughter struggles with this a lot. She's 7, and she'll watch Michael Jordan on a video or something like that, or Caitlin Clark, or name somebody, it doesn't matter, and then go out and want to be able to do that with a basketball. And I'm like, these people have spent decades of their life honing in these skills to be the best at what they do. You're not going to go out there in 3 seconds and do that. It takes trade after trade after trade, literally hundreds and hundreds and hundreds, if not thousands of trades, to be fast, to be good, to be able to enter how you want, when you want, where you want, and get it most of the time. It takes a long time. There were lots and lots and lots and lots and lots and lots of trades that I didn't get the entry I wanted. I didn't get in as fast as I would have liked. I wasn't prepared. I didn't have all of my setup completely ready so that I'm a one-click trader, and as soon as I click that button, my trade executes. That is something that you have to understand as a trader, is that I'm going to be better at this than you, most likely. And what I mean by that is the execution side of it. Because I've done thousands of trades, and I've done them, and I understand the logic and the background and all of the things that go into it. And I've watched the market for 20 straight years, every single day. So there is a level of, am I the best in the world? I wish. That'd be amazing. No, but I'm successful. I might be the NBA's, I might get the NBA's 8th man award or something. I'm on an NBA team though. I'm making money, and making money trading is what few people, like truly trading, not buy and hold, truly trading is what very few people can do, because it takes a lot of emotional discipline. It takes a lot of practice, and it takes a lot of study, and people live trade their money long before they're ready, and they end up blowing up accounts. You know how I know? Because I blew up 3 accounts. One of them was pretty substantial. So I know how it feels to blow up accounts. I know how it feels to feel like you're not getting it, or you're behind the eight ball, or you don't have the same advantages, or any other excuse you want to make. None of that is All of that is sort of true. You just haven't put in the time and the work and the effort that it takes to do this. And there's nothing wrong with that. You're at your point in your journey of trading. Everybody has to start somewhere. Some of you guys are just starting out and you've been trading for a week. Some of you guys are trading years. Some of you guys are trading months. But the amount of time you've traded is very different than the way you have traded. In other words, if you've been playing basketball for 5 years, and I've only been playing for 2 years, but in those 2 years, I shot 1,000 shots a day, and you just kind of went to the gym for an hour and shot some free throws and messed around. I'm going to be a better shooter, and I'm going to execute my shots better than you are, even though I haven't been trading as long, because I put in the work and the time that it takes. Some of you don't, I get it. Some of you are working a full-time job and you don't have time to do it. There's nothing wrong with any of those things. That's all real. Those are all valid concerns, complaints, and issues. However, you can't have that complaint and also expect to be at the same level as the trader who doesn't have those or has put in the work, right? So you have to understand that just because these things are attainable, but not just because you're trading. They're attainable because you put in the work and the time and the effort to get them attainable. So entries like that are attainable. That kind of speed is attainable if you put in the work and start to understand the charts and where the entries are going to come from. And that's part of why we do these live streams. I try to coach you through, as soon as we see this long stop here, I'm looking for entries off this 1-day min, because this is an excellent support level that should rip back up towards the 691 area. And, it's a grind right now. They're grinding it, but I'd still think we should see that pre-market high. They could fail it here. They could have failed this breakout at that level. But in general, those are the things you're looking for. Look at the wicks. Cannot put stops today. Our stop was fine. We made money on that trade, and the upside was limited so far, and you're still having to fade all this risk. So yeah, the wicks are big to the downside, but this candle here was enough to win on. Anyway, Flo, welcome to the stream. One of my challenges is to get ready for the put or LS. So another call. You have the backbone, so you know if you expect a long LS or a put. Do you have any indication of how to better expect signals? Yeah, there should be no. So we had a buy, right? So when this comes down and gives you an LS, you just switch over to a call. You're expecting a put if the buy continues. So when it doesn't continue and it comes down, this went to an LS, so you just switch over to a call. I mean, for me, it's just clicking the other side of the chart, and like you have puts on one side and calls on the other. I have my call up or my put up and ready in case they do give me a put, and then on the other side, I've got the calls, and I can just click over to the other side. So when this LS came up, all I did was click on the other side of my Thinkorswim, pull up my put, and get it ready. See, right now I'm looking for a buy, so I have a buy up and ready because the LS is on the screen. So you should always, are there times that the LS might pop at the very last tick? Yeah, of course. And then it goes by on the very next candle at the very, like you have like 2 seconds and it switches over. I would say extraordinarily rare, yeah. But yeah, that can happen. All right, they're challenging this low. They break that. We are headed down towards 68.80, 688.51, excuse me. It's simply practice. So if you know that the LS is on the screen, you should have a buy pulled up and ready. Now, if they take this back up and the LS goes away, well, I mean, you're going to have plenty of time to get a put ready because it's not going to come soon. So it's not like these things happen instantaneously. You should, like I have on my screen right now, a buy trade ready to one click buy, even though it won't happen on this candle. And then I just adjust the numbers in that as price moves. So right now I'm sitting, even though I know I'm not going to get it, I have a 690 buy pulled up, ready to go. And I say I know I'm not going to get it. That may not be true. We may get it. And this is why I have it pulled up and ready, because the LS is on the screen. And it's not going to be this LS goes away and a put comes up right away. That certainly isn't going to happen. Well, that was super annoying. So now we got to wait for another LS to come up because we don't have one. And we got to wait for that bar to close. Remember, if we're in a buy, you should expect a put. If we're in a sell, you should expect a call. If that buy is failing, then you should expect another buy because you'll get an LS. If that put is failing, then you'll get an SS, and you should expect a sell from somewhere. Looks like that 9:45 news was catalyst for some trapping. Fairly decent priced options today. When I say decent, I don't mean good. I mean, sorry, that's a wrong word to use there. Fairly high priced options. They're about $2 at the money. Usually that means there is going to be some downside, and we're seeing that. The NASDAQ is not participating today so far. They're down 0.75%, while ES is basically flat. RTY, a little less than flat, but not too bad. Transports just crushing. The transports have been on a parabolic run. That's a good sign in general. If you're a bull, you want the transports to do well, but it's a bad sign when things get parabolic. Coming down into the pre-market low here. The after hours low is what matters though, the lower of the two. So whether it is the hour between, so on the SPY, it's at basically midnight. So they set a low right here between 1600 and basically 8 o'clock. So 4 and 8 o'clock. And then the pre-market opens at 4 a.m. and they set a low slightly higher. So it's the lower of the two. You get a pre-market low, which is yellow, and after hours low, which is blue. They have to break the lower of the two for a full trend to be started, because this is the overnight range. The overnight range is from this low to this high. Down into that 69.30 support area, we'll see if they can poke and reverse here. That would be a great setup for a long. If not, we're going to free fall to 69.15. Okay, we do have the start of a trend day. Remember, a trend day isn't just breaking the after hours low. That is a good start. That is going to be a high probability continuation. However, what you want to see is you want to see a break of the low. You want them to set a low somewhere, wherever that is. Then you want them to come back up and test the 8, the 21, or the VWAP. So we have the 8 EMA, the 21 EMA, and VWAP. You want to see them come back and test that. Then you want to see them come down and break this low. Once it breaks whatever low it makes, doesn't have to be this one, they can continue further. But whatever low it makes, once they break that, that is a continuation of the trend. That shows you that they were able to break through the range, so the overnight range, they've broken through that. And to ensure it's not a trap, or to give you a very good idea that it's not a trap, you want to see them backtest and succeed to the downside. And so when they take out this low, that tells you there's still enough supply up here to continue pushing down to new lows. And that push down to new lows tells you that the trend is strong and wants to continue, and that's how we define a trend day. So right now, trend is strong. It looks like they want to free fall. So 69.15 is next support. We'll see how they react there. 6,900 below that. Now, if we do get a call here, or a buy signal, we will take it because we have not established that it is a trend day yet. They still have to hold and backtest and then break down again. So we will be looking for a potential buy out of the 69.15 area, or 686 on the SPY, 686.10 or so. If we don't get one, then they're very likely coming on down to what's this one here, 685.16, which is probably in alignment with 6,900. If they can't hold that, then we're going down to yesterday's low, which was on the ES. On the SPY, obviously it was 684, basically 684 flat, but I think it's 07. And on the ES, it was, we've got 68.97, so 6,900, 68.97, 6,900 zone, and 68.86 after that are your next supports. All right, there's your free fall to 69.15, target hit. We'll see what happens here. Remember, on strong days like this, we haven't established the trend, but it sure does look like it's wanting to trend. So supports very rarely hold, at least the first couple. And you're going to need a more of a major support. So 69.15 has already been given up. They're at 69.10 now. They're getting pretty far away from the 8 and the 21 and VWAP. Very often they're going to return to those. So a bounce here would be nice if we could get a buy signal that came up. That would be a good indication, or a good opportunity, I should say, is how I would say that. NQ below yesterday's low, so that is 5 down then on the NQ. Maybe I'd have to look at it. NQ has been significantly weaker then let's get our buy set up here. Yeah, I'm good. Okay, I just want to make sure I have it set. My ask. Let me just get okay. NQ has been significantly weaker, and that has been the big red flag that I've been pointing out for weeks now. That NQ has been underperforming, and the top may already be in. I do suspect still that ES has one more high left in the tank, and then we'll see what happens from there. Very choppy market action, but no supports have been taken out. Excuse me. And that's ultimately what matters is our supports being taken out. Now the Mag 7 continue to get pounded. They are down. You know, you have Meta getting crushed today. Where are they at? Up there. Nvidia getting hit pretty good today. Meta getting crushed today. Microsoft basically flat. Netflix still they're in the 70s now. Netflix getting absolutely murdered. Amazon getting hit pretty decent today. Tesla getting hit pretty decent today. Apple doing well. They're having a good day. Google getting hit okay today. So you're seeing the Mag 7 get beat up today. That's why the NQ is getting beat up. Relative to the RTY and the ES, it is getting smoked. Gold and silver. Silver bouncing pretty decent here. Gold having a continuation of yesterday's bounce. Bitcoin, I've been talking for a long time that it's in a breakdown mode. It's now down to that 75 target. Below that becomes 65 and then 55. And I do believe Bitcoin, there's a fair chance that a major top is in on Bitcoin. And that I still think we can see a bounce back toward 100. And then a very, very strong selling wave down towards 40. Okay, we got to be ready for a buy here. This bounce will be important for the trend. In other words, will the trend be able to continue down, or is it a fake down, breakdown, and back higher we go? I tend to lean toward fake down, but that's a lean. Most of that's based on the 1-day minimum above us on the intraday. Very often they will reclaim those levels. You have a positive ADD. You also have a slightly positive vol. It's certainly not blow them out of the water, but it's positive. You also have a close to a reclaim of 69.15 here. And the 5-minute squeeze has concluded. So there was a squeeze set up on the 5-minute. Obviously it was down, and that has played out. So there's a lot of opportunity for the bulls here to try to take a stab at it. But again, if they backtest to the 8 and then break that low that they just made, then we are done for the day with one win and we're out. Trade less, make more. That is a saying I've been using a lot because it's very, very true. People think you need to trade every single move or 20 times in a day. We trade generally 2 to 3 trades almost is the most we'll have in most days. There are occasionally days where we get 3 or 4 incredible moves, or we have 2 winners and 2 losers or something like that, where we get 4 or 5 trades in a day. But most of the time, 2 to 3 trades is the max, and that's the way you really want it because there's only about that many setups in the day that are really quality setups. Again, does the market sometimes give you more than 2? Of course, and we'll take them. We're going to take good setups when they come, but most of the time, you just get 1 to 2. Should see a little rejection here off of 30. If they push right through, then this could be a really nice rally. Ultimately, they got to get above those moving averages for it to really be a face ripper, but getting through 30 directly would be pretty strong from the bulls. If you're a bull, what you'd like to see now is you'd like to see a small pullback off of this level, off of this 30. So they've made a low, they've come back to 30, telling you price kind of wants to be up that way. Hold on, we may get a buy here, so I want to be ready. Okay. I'm in at 185 on 690, and my stop is going to be 688, 65, 688, 65. So 185. I don't love this entry. We're right back at the 8. It's not a great place to enter. There's probably going to be a little bit of rejection here, but hopefully less than our stop, and we can push higher. Okay, they stopped us there. I got, okay, 166. So stopped at 166 on that one. If we get a buy signal, we'll take it again. That was just not the best entry. There it is. Okay, so give me 1 second. I do not have this one ready. So this one's gonna take a second. Okay. Shit. All right, we're going to take almost the same trade. It's going to be 688.60 as our stop this time, and 185. So we'll try again. 688.60, 185. It took me a second to get that one in, guys. Sorry. It actually helped because we got a little better price, but 688.60 is your stop, 185 is your call, 690 is your strike, and we stopped out on the last one at 166. Well, second verse, same as the first. Let's see if they it stopped at 163 on that one. I'm going to give him one more shot because this is looking like a good reclaim of 30. All right, back in long one more time. There's the buy signal again. We got rooted out there. We may get rooted out again, but this is a good reclaim of 30. So you would expect them to go to 49 here. And if they do, we should make money. But Hold on one second. I'm trying to update everything. This takes a minute. Okay. Now everything is updated. All right. Let's see where we at. Oh. Well, let's see if they can hold here. You widen your stop if you get a bad entry? No, absolutely not. Jacob, what I missed, been trading silver. You missed a winner and two losers, and we're in a third trade right now. Long, we are got to hold 688.60, and we are looking. We're in at 185. There's a lot of back and forth there. I'm hoping we've shaken that out and are ready for the squeeze towards 49. But we'll see. It's not a bad entry in the sense of the market should go long here. It's a bad entry as far as we're getting in right at the moving averages, and there's going to just be a little bit of chop there, and our stop is going to be taken out more often than not because of that. So the reason I ran it back is because very often you get that quick rejection and reclaim. So we ran it back a couple times. If we stop out here, that's 3 strikes and I'm done for the day. But this is very likely to continue, assuming they can. Well, let me look at the ES because I need to know the exact numbers on the ES. Yeah, so in general, this should continue. This should be a continuation towards 49 and then see what happens at 49. So we're going to see if they can hold our stop here and then go. They cannot. All right, I got 169 exit on that one. In general, I expect this to go to 69.49 next, and then from there see what happens. We obviously couldn't get them to hold this stop. They've hit it like 6 times now. That happens. It was I said when we got in here it wasn't a great entry because it's right on the 8. However, if they do fail this 8 down below here, it is a trend day down anyway. The biggest issue you have today is the Nasdaq, and the reason we didn't get that buy signal until we did, which is way up here, is because of the Nasdaq. The ES was ready to go down here, but the Nasdaq wasn't on board yet, and without the Nasdaq, the market's not going anywhere. So we needed the Nasdaq to help out, and it didn't get a buy signal until up here, which causes a bad entry on the ES, which is what we're trading, and ultimately causes the stop outs. So 40-cent winner, and then let's see how we did on those 19 cents, 22 cents, 42, 41, and 16 cents. So about a 20-cent loser on the day. Obviously not a great day. when you're in the red. But again, that's just the way trading goes. It's annoying, that's for sure. This is, I think, a decent setup, but maybe if I get off the stream here and we're still sitting, I may take a swing trade with this being my stop down here. Looking for, I would say 690.35. So would be my first area of profit. And then I'd be looking at the all-time high, or the all-time highs. Nope, the pre-market high from there. So if depends on how price looks here as we go, but as I get off the stream here, we may do that. Overall, for day trading is what it is. Been a rough run on Wednesdays. Wednesdays have not been good. Well, January just wasn't good. So again, we closed January in the green, but it was like $1,600. So certainly not what we're looking for on the scale that we trade. But green is green. Today, red was red. It happens. Like to see some consistency return to the market. If you want to take one more shot here, I would not blame you. I understand. I have a 3-strike out policy. I follow my rules. That's why I'm a successful trader. Just be careful. This really should be an up move here, based on just overall chart metrics and failed breakdown metrics. So I would expect them to make a decent move, but I trade my rules for a reason, guys. You are welcome to take that trade that just came up, though. See how it plays out. Fourth time's the charm sometimes. Those are, this is where you have to, this is a good lesson. You have to compartmentalize what happens after the fact. Move away from it. And what I do is I don't even watch the market. I watch it because I have to give updates to my group, but I don't watch it. So when I watch it for trading, I'm watching every tick of every bar. When I watch it, I just go back every 10 minutes, make sure we haven't made a huge move. If we have, give an update, something like that. Because it is frustrating. You're human. You're going to be emotional about trading or missing out. You're going to get fear of missing out. You don't want that. Even if this is a winning trade, it doesn't matter. You just move on with your life. If you ever play poker, or you ever play a slot machine, or you ever play anything else, poker is a great example because there are times when you have 7 deuce, worst hand in poker to start Texas Hold'em anyway. And of course you fold, and it's a huge pot, and the board comes up 7 deuce deuce or 7-7, whatever, just something that gives you a monster hand. You're like, oh, I missed out on I should have had $2,000. No, you shouldn't have, because you kept chasing. You would have kept chasing 100 other 7 deuces and lost that $2,000 before you won it back. You don't. All you see is the result right now. You don't see the damage that would have been done to get to that result. And all that does is reinforce bad habits. So it's really important to compartmentalize. They're moving up to 41 now. So 49 should be the next target. And we'll see if they can get there. But overall, you have to be able to separate good trading strategy from results-based trading. And what I mean by that is you can't use what-if scenarios and say, oh, what if I would have stayed in there instead of getting out like an idiot? Well, then the next time they would have done what they could very easily still do, which is this. And then you stayed in, and then you got that, right? You follow the rules. You don't worry about what the market does after the rules, because it doesn't matter. The rules have been broken. You move on. It's an easy game. I listened to a podcast of a very, 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 very successful day trader, and one of the things he said was, I only trade from 9:30 to 10:30. And the guy interviewing him said, why? And he said, because I found that after 10:30, I lose money. I just make too many mistakes, and 9:30 to 10:30 is what works for me. So that's my rule. I don't care if I would have made another $25,000 that day. It's not what I want. It's not what's good for me, because that one day would have not offset the other days that I would have lost 10,000. All right, there's 49. So that reclaim worked. Everything there was right. The indicator was right. We just were our stops just didn't quite work out. It happens. It's part of trading. Certainly wasn't the indicator was wrong. It was that the entry was a little rough for us. Anyway, they hit 49 now. If they can reclaim 49, then 691.45 comes in. We'll see what that is on the ES. This level right here, 659, and then 664 after that. So those are the next levels higher. If they break through 664, 672, 69.72, and so on. But they hit the required target. The required target was 49. And from there, we'll see how it goes. Brunson hand. That's 10 deuce. 10 deuce is Doyle's hand. He won 2 World Series of Pokers. And heads up poker is totally different. But anyway, yeah, that is his hand that he won 2 bracelets with. They held 7-6-8 retrace, so this could be wave 2 done, and maybe starting wave 3. Sure, certainly possible. The whole structure right now is a mess, so I would not be overly confident in any Elliott wave structure at this point because it's all overlapping nasty nonsense. So we're very likely in some sort of triangle slash double three slash, I don't know, advanced complex corrective pattern. And we'll see how that plays out. But and this again, I've been trading futures quite regularly lately. This is why futures are so much better because you don't have theta, you don't have to have such tight stops. You can really pick failed breakdowns well. This is a perfect failed breakdown of 30. They broke down below 30. They came back to 30, back below 30, recaptured 30, and then on to 49. That's how we knew that was the next target. Now they're recapturing 49, which is going to tell us that 58 is the next target, and so on. And with futures, you don't have to worry about theta. You can keep your stop way down here and then move it up slowly and do a whole lot better. So futures trading is going to be the future of what I do because it's going to be, in my opinion, 10x more profitable than I'm doing right now because of how futures work with day trading. They're far superior. And anyway, yeah, it's a much different ball game. It's 10:26. I'll give you guys 4 minutes of questions. If anybody has questions, concerns, want to know any of the metrics that I use, the failed breakdown, the failed breakout, how those work, what triggers them, any of those things, I'm happy to explain and go through. The reason I knew 49 was the target and how we would get there, any of those things you want to know, we can go through. But otherwise, we'll call it and move on. Does your system work with futures? Yeah, absolutely. In fact, futures are what it tracks on the flip side. So when you're trading the S&P, if you have it set up properly, you are tracking the NASDAQ futures and the ES futures. Because what you want to see is you want to see all 3 of those markets moving in the same direction at the same time because they all basically trade the same. And there are times that the NASDAQ is moving in the opposite direction, and that creates either chop or stagnation in the market, where it's not chopping per se, but it's really not moving any higher or lower. I guess that's chop still. At any rate, yes, it does. Sam says I use futures with it, works great. And the thing about futures is so the hard part about options. Here's what's hard about options, right? In fact, it works better with futures would be my argument, George, or Otis. Sorry. With options, you are constrained by time, and that time, the longer it takes for a move to happen, the higher or lower that move has to go to reach your target. With futures, if my target is 7 points on futures and we hit 7 points 2 hours from now, but never took out my stop, I still get the full value of 7 points. On options, if they do that, if it takes 2 hours, and there's been trades we've sat there forever where they just chop sideways. If they if they hit it on options 2 hours from now, you might just be at break even. You know, you might not have made any money, and you certainly probably haven't made your 20% to get out. So with futures, you know, you can get in and out at any time during the day in that same trade and get the same value. With options, you lose so much value so quickly that you need the move to happen fairly quickly. So, in my opinion, futures are far superior for a lot of reasons, and it it's a better. It's the answer to your question is yes. Short answer. Long answer is, and I think even better. Also, options premiums are very high for the first 2 hours of trading. Yes, exactly. You got options premiums that are higher. You can trade the pre-market with the futures if you want to do that. I mean, that's up to you if that's what you're looking for. I only trade the failed breakdown setups in the pre-market with the futures, but I mean, I am uh, doing very well with futures. Very, very. Do you need to use margin with futures? Yeah, I mean, you have to meet the requirements of whatever your broker is. Um, so that is a thing. But so one way you can do it, here's you know, I had heard about these and I never looked into them. And now I'm in a contest and I'm doing pretty well. But um, so there are things out there called prop firms, right? And what you can do is you can control an account for a very small amount of money. And essentially, it's telling you, are you a good trader or not? Can you effectively trade the market? Because if you can, we'll give you this money to trade, and you get to keep 80 or 90% of it, just depending on how good of a trader, or, you know, what level of trader you're at. And it's a great way to learn. I had one reach out to me because of my channel and my reach and the people that see me, and they said, "Hey, would you mind joining this? Because we want you to talk about it and do stuff." And uh, so I joined, and I'd never done one before because I just, you know how people are, right? If you hear something and you're not familiar with it, then you immediately start to think scam or cheater or why would you do this? You know, the too good to be true, blah blah blah. So I studied it and looked into it and talked to them and you know talked to the guys that run it. And now that I understand what it is and how it works exactly, is it difficult? Yeah, it's difficult. Um, because they're putting up their own money. They want to make sure you can trade. If you can't trade and you don't have risk management and you're an idiot, they don't want you trading. But if you are a good trader and you follow rules and not their rules, whatever trading system you want to use, however you want to trade, you can trade. But if you follow the rules and you can trade effectively and you can manage your risk, I mean, I'm going to take a large chunk of money out of this, and I never had to put any up. Now, when I say not put any up, you would have to put some. I'm doing it as a they're sponsoring me because of who I am, but you would have to pay a fee. Usually, it's you know depending on the size of your account, like $100 to $300 or something like that, and you get to control either 25,000 up to some prop firms I think do up to 100,000. Um, I'm controlling a $75,000 account and none of it is my money except for the money that I make trading. And so it is a um, excellent way to one be able to trade futures without having to put up your own money. Two, learn futures for a small amount of money and still be live. And then three, um, make money at a level that you probably couldn't if you didn't have the capital to do it and not risk your own capital doing it. So when you screw up, you're out the $300 that or whatever the fee is at the one you choose if you screw up, and that's it. Because what they do is they put you in a simulated environment first. So you have to pass a test. So the simulated environment is going to be live data. It's just like you're trading the market, and you have to pass a test. So for my test, or for anyone's test, almost all of them are the same, but for mine, it was a $75,000 account. Your drawdown is only 2,500, so that's not very much. You got to be a pretty risk averse trader, and you got to make a certain amount of money. So the parameters for me were $75,000 account. You have to reach 79,500, so 4,500 in profit. You can take as long as you need to do that. but a minimum of 5 days. So you can't just have one good trade and be out. You got to trade 5 times, 5 days. Um, Minimum required one trade a day, so you don't have to trade like 70 trades or anything. Um, and then that's it. So you get to 79,500. You do it. You trade 5 days, and you don't get more than $2,500 drawdown. Let me clarify that. So you start with a 2,500 drawdown on a $75,000 account, which is 72.5. Once you reach 77.5, that drawdown is at 75,000. If you go up to 100,000, the drawdown is still 75,000. So it's just break even for them, right? It's the break even level. So once you pass the test, you get a pro account, and then that's real. Well, it depends on the prop firm, but that can be real money. Some still do simulated because trading real money is still emotional. Even if it's not yours, it's still emotional. And you get 80% of what you win. If it's a simulated account, you get 80% of what you win. And if it's a live account, you get 90% of what you win, and they keep 20% or 10%, or they keep 10% on the live account. But what it does is it proves to them that you know how to trade, and then they give you capital, and then they have the control of the account. So if you break the drawdown, they liquidate the account so that you can no longer trade. So the way they make money, if you think that how are they making money, the way they make money is most people are terrible traders. Let's be honest. 90% of the people on this call are probably not winning traders. That's no knock on anybody. I'm not trying to put anybody down. I'm not singling anybody out. I'm not saying anybody's name. I'm not saying, I don't know if any of you are profitable or losers. I know nothing about what you do. I just know statistics. So probably most of you are overall in day trading and swing trading losing traders. And again, don't take that the wrong way. It's just stats. So they think they're good traders, and they go sign up and they pay the fee, and then they fail, and then they pay the fee and they fail, and then they never get an account. And they probably have thousands and thousands of people who do that. Well, I know they do it. That's how I say. I asked very bluntly, how do you make money if if you're only taking 10%? So most of their money comes from failed traders failing the tests. They get $200 times 1,000 people. That's $200,000 they just made, and they never had to trade or trust anybody to trade anything. So the good traders, if you truly believe you are a good trader, or you want to learn how to become one, because once you start losing money, you should snap back and say, how do I not lose money? The truly good traders can go trade futures at prop firms and do very well. It's a very good barrier to entry on futures. Jacob, have you considered giving your buys and sells on futures? I think that would be great. Yeah, I have, and I think in the future that's probably the route I'll be going. They'll still be applicable on the SPY, but trading futures is probably where I'm headed because of many things. I've also got a few things coming down the pipe. There's going to be an Invest with Jacob AI mentor that you can literally upload a chart of any. You can upload a chart of any stock and say, hey, based on these variables or this, the systems that Jacob uses, where are the zones that matter? Where are the support and resistance levels? What is VWAP? What is it going to be a big deal? I put it in my room every day for an update, and it's really, really cool. Let me see if I can post what you get. And it gives you a bunch of levels, and I don't know if I can post it in the chat because it's a lot of formatting, but maybe. We'll see what happens. Apologies if this comes out weird. That's too many letters. Okay, so yeah, it's just too much to put in there. But anyway, that's coming down the pipe. We got my room will now be on my web. Well, not now, but will soon be on my website, where we have all of the rooms contained. All of our trades will be not only posted in there, but chronicled in real time. You'll be able to see what trades are open, where they're at, what the profit and loss is overall for the month, the year, the week, every single trade. You can go look at the lose, everything that we do. They're already in Discord, but it's really not a great platform for that, in honesty. It is you'll be able to get real-time alerts to your phone in the new room. So if you put in your phone number or your email, they will send you an email update or a text and say long or short, and here's the trade, all that stuff. So a lot of updates and stuff coming to Invest with Jacob. I'm going to revamp the show. That's why I haven't done a show in a while. I'm completely revamping how I message what I do each day. And so a lot of different things coming down the line. At any rate, long story short, if you're trying to trade futures and you want to learn about them, prop firms are a cheap way to do it as far as not having to have leverage, not having to have the capital, not having to put up your own money, quite frankly, other than the barrier to entry being their fee up front. So the one, if you're curious, the one I use is Take Profit Trader. I really like them. Their customer support is their biggest issue. It takes them forever to answer anything. It's kind of annoying. The guys who run it know that. They know my feelings on that. But otherwise, it's a pretty stand-up place. All right, guys, a lot of whipsaw through here, but as long as this low holds down here, I would expect these next levels to hit. And this is the whole advantage of futures. So another advantage here real quick, and then I know I said 1030 and it's 1040, but whatever, it doesn't matter. So we got a reclaim of 69.30. So we got our entry, and our target was what? Does anybody remember? So we get in at 69.30. Our target was 69.49. They hit that up here. So let's say we had 6 futures contracts. You would take 4. I take 5 off. So you have 5 off on a 19-point futures win. That's really good. And then you keep your stop down here until they get 2 support levels up. So they haven't, or 2 resistance levels broken. So they haven't done that. So you keep your stop down here on that last 1 contract, because if you took 5 up here, 1 contract coming all the way back down to here isn't going to kill you at all. You're going to do really well. And then they are still working their way up through these levels. So as long as they don't break this low, that's what we're looking at. So, sorry, I had to read a quick message there. So if you have your stop down here, you can sustain these losses, and on options, you can't. You can't sustain this move down. So if they take this higher and run it through the rest of the day, then you can start to move. So if they get through 64, I can move my stop up to 30. And if they get through the next level up, 72, I can move my stop up to 49. If they get through the next one, I can move my stop up to 64 and let it keep running and give me the opportunity to catch when we have those 200-point moves in a day or a couple days, let's say a day, where you have a 70-point spike down, you catch the failed breakdown, and you get a 65, 70, 80, 100-point spike back up. You can catch those with futures, and you cannot do it with options. You can't. There's just too much theta burn, and you'd have to have your stop so wide that it would crush your first position. So I think futures the taxes on them are way less. They're just a far superior product. All right, I have rambled long enough. I am going to call it for the day. Again, one of those days we were close, had a couple opportunities. We were just a little early here. Then they went and hit our target. We would have made money. But if ifs and buts were candy and nuts, we'd all be 300 pounds, where most Americans are anyway. We're fat. But you know what I mean. So we don't do results-based trading. We just do trading. And that's it. All right, guys. We'll be back next Wednesday to do this live again. And that is, what is your stop strategy on this? Go back, live in large, and just watch when you're 2 levels up, you move your stop up. If you're talking about the futures stop strategy. I assume that's what you're talking about. Not sure. But anyway, overall, guys, Appreciate you being here. Talk again next week, unless you're in my room. Then we'll talk, at the call at noon today. We'll go over everything. Let me just see. What's everybody doing? Is gold still? No, ooh, gold's turning red. Silver coming back down a little bit. Bitcoin struggling. Mag 7 struggling. So we'll see. We'll see how they do. Thanks, everybody.